Welcome back to Market on Close. I'm Sam Barters on the floor of the New York Stock Exchange, joined by Alex Coffey in Chicago today. And a very welcome back to Alex Coffey. What was a really busy afternoon for us. So just some final takeaways here, and what was quite a wild ride for that final hour, of course, of Trump's comments. But even before that, we did see some outperformance in places like technology, most namely memory. SanDisk ended up one of the best names on the S&P 500, up 11%. And it came as Micron got a pair of price target boost. You had Citi going to $430 with a buy rating, citing some of that strong data center demand and rising prices. They expect DRAM prices to rise 171% this year versus last year, and NAND prices to rise 127%. Susquehanna also raising the price target to $525 to reflect stronger pricing trends as well. U.S. memory stocks not moving in tandem today with their South Korean counterparts overnight, SK Hynix and Samsung, which had a very, very difficult session. Let's see how things go tonight, but both seeing heavy selling pressure and dragging on the Kospi for Monday trade. There's a concern over in South Korea right now that the local chip industry could be impacted by higher energy prices coming from the conflict over in Iran. And that's according to a lawmaker who met with executives from companies like Samsung. But the continued outperformance in Chinese ADRs was also notable. Chinese stocks have seen less selling pressure than their regional counterparts because of the thinking that China is more insulated from the energy shock, and given its stockpiling data out of the country overnight showing Chinese consumer prices hitting a 3-year high. That's actually being taken as a good thing in China because of the deflationary pressures that the economy has been facing for years now. The big question is if that lasts. And I would just take away also, Alex, as we were discussing with our previous guest, that it's not just Chinese stocks. Actually, straight after that development we got from Trump, we saw very much international ETFs catching a bid. The EWY finishing up the day 5.5% higher. Obviously, that is what tracks some of those South Korean names. So let's watch to see what the overnight session looks like. But what were your takeaways?
Look, I'm not going to say anything we haven't said over the last hour, but it still is an oil-driven market, an oil-driven story. But I think you got to be encouraged by the fact that not only did oil prices come down substantially to finish lower on the day, the volatility in the S&P 500, the VIX finished down almost 4 full points. Substantial repricing as fear is starting to be coming out of this market. But also oil volatility. It peaked at near 120. It's down to about 100. So still very, very elevated, but closing down on the session. I think both of these things, Sam, allow for a market that needed a chance to breathe, and it's getting a chance to breathe here into the close.
Yeah, it certainly is. Let's see if some of that continues, obviously, tomorrow, because we do have a number of earnings that we're going to be watching out for. We've got, of course, a lot of data as well. We've got existing home sales, so a bit of an update on the housing sector, how things are going over there, given, of course, we've seen mortgage rates coming off a bit as well. I'm also going to be looking at the overnight session out in Asia, just in light of some of the commentary that obviously we've got from President Trump from these reports, if that very much helps some of those markets catch a bid, given the damage we've seen in places like the Nikkei 225 and the Kospi. We've also got some event risk tonight for the Asian markets because we're getting Chinese trade data. This is obviously something that a lot of global investors watch very closely, particularly because, of course, China is running that more than $1 trillion trade surplus with the rest of the world. We have seen fewer goods coming here to the US. Let's see if that continues in light of course, Trump's tariffs. This is one of the first updates we're going to be getting, of course, since the SCOTUS ruling as well. So obviously we want to get a little bit of an update on how things are faring in the world's number 2 economy, and of course just exactly what sort of reaction we see out there, particularly given the Dixie came off just in that final hour as well. No doubt that might help put some of the wind in the sails of some of our regional counterparts across Asia and Europe too. But what are you going to be looking out for, Alex?
You also get Kohl's and NEO, but it wasn't that long ago, a couple weeks, that the conversation for markets was AI replacing every software and every worker, and who knows what was going to happen. How much things have changed in just a couple of weeks. We'll see what Oracle has to say about that when we hear from their leadership team tomorrow afternoon.
Yeah, I mean, this was already a market that was on edge around the AI story, but also some of the credit risk concerns as well. I know that Oracle is a name that's been thrown around with, obviously a lot of attention on its debt to equity ratio as well. So let's take a look at what they have to say about that. But plenty to keep our eyes peeled on tomorrow. Thanks so much, Alex, for helping me get across a really busy afternoon here on the Schwab Network. That's going to do it for both of us here on Market on Close.